Hey everyone, quick update for Monday, January 27th. Okay, so obviously the big news, over the weekend or Friday before the weekend, DeepSeek comes out. China comes out with DeepSeek, which is a AI competitor to ChatGPT, Gemini, Llama, all the large language models, right? So if you haven't been up to speed on what's going on, just briefly, basically, they in 2 months and $6 million, they built something that was just as powerful as ChatGPT, which took years and billions of dollars to make. And so all the chip companies and tech companies freaked out and had big drops, and some bounced back, but it was a pretty bloody kind of Sunday opening into Monday morning. If we look at the S&P, for example, here's the overnight action when the market opened Sunday evening, bounced into the open, and then continued to chop sideways to higher all day. Big spike in VIX. VIX pre-market was in the 22s, ended below 18. So a lot of that uncertainty came out throughout the day. A lot of contraction and volatility, but that doesn't mean it's over. It just depends on, we don't really know what the impact of this will be on some of our U.S. tech companies, right? Is this going to be just a little bit of a fake out that it was kind of a scare, but it shakes it off and it's no big deal? Or is it deeper than that? Is it going to create some real long-term structural changes in our technology sector that, end up, continuing to provide some downside in price, at least in the near term? Nobody knows the answer to that, but so I'm just going to stay nimble. And so a couple things I want to talk about. Number one, day trades. I had a few day trades, one loser, 3 winners, plus 1864. Did a price action iron Condor in SPX. Ended up just closing it out for a small profit. I had to leave. I was going to be away from my computer and didn't feel comfortable holding onto it while I wasn't. And it was right here. Looked like price was starting to get really heavy, and it ended up bouncing. I would have booked a nice profit on that, but that's okay. I didn't want to risk it, so small profit there. My BIX did okay. I had a double stop, but I still booked 480, so positive green day. And then what I really wanted to mention was my calendar spreads. So I don't have it up right now, but my 6-7, 4-7, 5-7 from Friday all closed out near the open because they hit their put tested exit criteria. So I was down several $1,000s, actually around $5,000 on those total. And then I still had a 3.5, 3.6, and 3.7. And I was using Tradier to trade these. And with the API connection that I was using, they completely closed some legs of one trade and not the other. And so I was on the phone with them 3 different times this morning, but they basically, and then they had my buying power all messed up. So long story short, I had to leg out of all of my remaining calendars. And so I started to leg out, and as I was doing so, looking at SPX, this was right here, and SPX started moving lower, and I noticed my P&L start to increase quickly. And so I was like, huh. And of course, it's because I had closed out my short options first to remove the risk, and I still had some long options on. And so I started to close out the calls, and so I really just had a bunch of long puts on. And then I started to close some of those out. I held some. So all in all, I haven't tallied it up yet. I'll do that on my weekly recap. But I got back, just from those long puts, I got back everything I lost on the double calendars plus some. I gave some back on this end of day bounce, but still where I stand, I came out ahead on my calendars this week. So not something I would recommend. It was a stroke of luck. It was a little bit of a, just the fact that Tradier messed up my orders, and I ended up legging out, and I ended up benefiting from those long puts gaining value, and the market started to go down in these couple periods. So like I said, I'll have my final tally at the weekly update. But just we were having a conversation in the calendar chat today as well. Someone was asking about doing put calendars and call calendars, and putting it on as a double, but then managing the calls and the puts separately. And the answer is sure, you can do that, but then you're always going to run the risk of whipsaw, right? You get out of one, it whips back the other way, and you lose more than if you just managed it like a double calendar. Well, this is kind of the same thing, right? I started to leg out, and I ended up benefiting from the long puts because of the implied volatility and the down moves that we saw at that particular time. Had we had tested new lows, it would have been significant amounts of profit above and beyond what I would have made with the calendars. But that's just kind of the way trading works sometimes, right? I've been on the other side of that many times as well, where something gets messed up and you end up losing money, where if it would have been done correctly, you would have ended up making money. So definitely not something that I'm going to do in practice, but that's part of trading. And so just wanted to kind of post an update about that. And and this is why it's so critical, right? So I automate my calendars, but if you don't know how a position works and your automation gets messed up, how are you going to know how to fix it? How are you going to understand how to leg out and do the shorts first, so you're removing the risk and you're not left with naked options for buying power, buying power purposes and risk and everything else? You have to understand the strategy before you ever automate a strategy. And that's a key thing that they talk about all the time when people are new and they're trying to set up bots and things like that. Setting up bots without knowing how the strategy works is a very big risk. So don't do it. Anyway, hope that helps. Just wanted to give a quick update. Everybody have a good night. We got some volatility back in the market. Look forward to the rest of this week. Cheers.